The most important thing when you're about to learn how to trade is choosing a coin to trade in the first place. The reason why is that you will be either in a coin or you'll be in its underlying, which whether that's Bitcoin or it's dollars, you're going to be holding a decent amount of the coin. You're going to be holding a decent amount of either Bitcoin or dollars. And if your position gets upside down, you're going to be holding a coin for quite a while. So you want to set yourself up for success. You want to be trading a coin that will do well against the dollar or against Bitcoin in the long term. And so choosing the right asset can make the difference between just absolutely getting destroyed or having to wait and hold out the storm for a while and then getting out of that tight spot. So the number one thing that you need to do when you're choosing an asset is finding out, number one, what the coin supply is. Now, what coin supply is it's the actual amount of coins that the project will ever have. So new traders, they get roped into buying a coin that they know nothing about. And I'm on CoinMarketCap right now. And if you just go to search, these are the trending coins. And so let's say your best friend's like, oh yeah, here we go. E-Force. This is the best project known to man. It's the new Bitcoin. This is going to be the next big one. So we look at E-Force. And on CoinMarketCap, the first thing we're looking for is total supply. The total supply of coins is going to tell us exactly what kind of liquidity we'll have. It'll actually give us a price range, because if there are 1,000 coins, our price range is going to be a lot higher than if there's 1 billion coins. So in this case, there's 1 billion coins as a total supply. Now, we want to compare that to the circulating supply. So in this case, we have 22 million in circulation, and eventually there will be 1 billion on the table. So we are at a 2.2% circulating supply. What that means is that the coins that are out there now are extremely rare. These coins are the only coins that people can trade is just a tiny fraction of what's coming. When the rest of the billion coins show up on the market, the price, the supply and demand of this coin, supply is going to launch and demand is going to do whatever it does based on the popularity of the project or whatever it is. Generally, the demand is not going to change too much. So when you add supply, when you add the other 98% to our 2% circulating, guaranteed the price is going down. So you need to be very careful, especially on a new coin, that what coin this is going to have a major influx of supply, and it's going to give this coin a lot of selling pressure. Right now, we're up 91% today. This is an overbought coin, because there's nothing out there trading. The people that are excited about the project, they're the ones that are trading it and buying it and know about it. But does that mean the rest of the world's going to be on board, especially when there's another giant amount of supply that shows up on the map? So you need to be very, very careful about that. The next thing we need to know is, what is our inflation rate going to be? So a lot of times you can find the inflation map in the documentation somewhere. On CoinMarketCap, we'll just have to kind of look and see in the About section, how does it work? How do they plan on doing it? What can we kind of expect? And if not, you'll need to go to the website and find information on the coin itself. But you need to know how they're going to be distributing these coins, because let's put it this way. if the US dollar, they try to say that they're going to be around 2% inflation per year. Obviously, we all know that that's not true, especially not in the year 2020 when they're printing dollars like crazy. But the idea is if your asset, if your coin here needs to be growing against Bitcoin or the dollar, the less inflation you can get, the better. Because if your underlying is inflating, so if your dollars are being printed like crazy, maybe it's keeping up with the inflation of your coin. If they're both inflating at the same rate, then it's only the trading and other influences that are going on. You're not going to have the supply-demand shock problems. So you want to look for that. There's a website that will help. It is viewbase.com. They have live inflation rates. So you can actually look and see how many new coins are being added. Because these coins are on a blockchain and therefore public, you should be able to verify programmatically what the inflation rate is. You can see the supply. And then they have information on coins that they've just got a list of coins that they have done research on. But you can do the research on your own coin and figure it out. Ask around and figure it out. Because coins that have zero inflation or negative inflation, those ones are going to be doing better than your underlying. If Bitcoin's your underlying, you're looking for a coin that has less inflation than Bitcoin if you're doing a long-term trade. If you're swing trading Zcash, that's fine, but just know that there's economic pressure for this price to go down against Bitcoin. If the dollar is being printed at 25% annually, then you're in the right place. You're going to be going back and forth, and there's not going to be that pressure. So inflation is a giant part of this. We want to figure out exactly what our inflation is. Next step is to figure out what kind of liquidity we can expect. So I'm going back to the CoinMarketCap, and what you can find on CoinMarketCap is the 24-hour volume. Now, oftentimes this volume is fabricated. The place to find the real volume is going to be down here where you look for market pairs. You go to market pairs, and CoinMarketCap will sort the coin by the exchanges that have the most volume. And they will also tell you where volume is excluded because someone's messing around with the coin supply. But what you want to see on your coin is that there are multiple exchanges, and you want to see a good amount of volume. Once we find out which exchange has the highest amount of volume, then you will click on that, and we're going to look at the order book. The order book will be different for each exchange, but they will always post what the order book looks like. And so I'm just flying by the seat of my pants here. I don't use HBTC, but what we're doing is we're looking to see how much money is being exchanged. This turns out to be a USDT pair. So we're looking at our coin that we're just researching against the dollar. This is the tether. The tether, it's supposed to be a 1-to-1 ratio against the dollar. So how many dollars are being traded? If people are trading 11,000 of these, or 600 of them, 1,000 of them, we're looking at about $3,000 or $4,000 worth of depth going down this way, and we've got tens of thousands of dollars of depth going this way. We've got hundreds of thousands here. So what we're trying to find out is how much could we reasonably trade. If we're trading $100, this coin is fine. We can definitely liquidate $100 here and there. If we're trading $100,000 or more, we're gonna have to be very careful as we get in or out of a coin. And just remember that sometimes in a crazy time when coins are up, significant amounts in the last 24 hours and whatnot, the volume will increase. And so you need to be careful that you check this during times of plenty and times of famine, and make sure that there's enough order book to handle the amount of trading that you're doing. And finally, the last point that we want to be looking at is how old the coin is. I can't even tell you how important it is, because there are so many projects that come out and there's so much hype, so much excitement, and they launch up, and it a lot of times has to do with this limited circulating supply. And so the prices will go way up, but then as the rest of the supply shows up, and as other people get excited about other projects, that's when people start losing interest in the project. And so many of these have gone from, astronomical market values, market caps, all the way down to just pennies. People lose so much money on brand new coins because they're just in a hype cycle. If we're looking at this coin is 3 days old. That explains a lot about the circulating supply. That explains a lot about why we're seeing a pump right now. To be honest, I don't think a new trader should touch anything that is less than a year old, because a year will tell you how many people in the community are still supporting the project. A year will tell you whether the project is completely belly up and toast. A year will tell you where the true price discovery is after it's had a chance to be on the market. You can still make a lot of money on coins that are a year old because they are in their natural cycle. They are doing their normal natural ups and downs. And if you catch them at the bottom and you sell them near the top of those cycles, you can make plenty of money and do really well with your trading. This is playing with fire. You're going to get on the top of something that's gone up 100% in the last 24 hours, and you're just going to get absolutely massacred because there's no price discovery. Nobody has had any time to say what the true project is worth. The people that are determining what the project is worth right now are people that know about it, love it, believe in it, have told all their inside family and friends, and the rest of the community has no idea what this is, and nobody else knows whether it'll be successful. All the true believers, they're the ones that do believe in it. That's why they're buying it up and getting excited about it. So when you find a coin that is more than a year old, has a strong community, has low, whatever the coin supply is, if it's in a good range, and you know that the majority of the circulating supply is already out there on the market, you have avoided so many problems in your trading just by selecting the coin. So in summary, step 1, make sure that your coin is trading in a range that makes sense versus its total coin supply. You can compare this to other coins that have traded for a long time and see what their price range is versus their coin supply to see if you're in the ballpark. Step 2, make sure that the circulating supply is nearly the total coin supply. If not, you're going to have a lot of supply pushing down prices, and you'll need to know exactly how that's going to impact you. Step 3 is make sure that the inflation rate is lower than your underlying, or at least nearby. That way, if you get in an upside down position, just by the natural printing of dollars, your asset will increase in value. Step 4, just make sure that the amount of money that you intend to trade is going to be available on the buy and the sell side. You want to make sure that you're not moving the market whenever you buy or sell, because then your execution price won't be as good. And finally, step 5, if you can find a coin that's at least 1 year old, it'll almost resolve all the other steps, because you'll have a good amount of circulating supply out there. Your inflation rate will be known and tested. You'll have been through a couple of hype cycles, and you'll be in a better trading range. You'll know exactly kind of where the price should be because you have enough time for price discovery.